for me to not offend you with telling you a cash offer number. If you want to be at 3, I'm not even going to tell you where our cash offer is because it's just too low. That being said, you have kind of another idea, a couple ideas for you that I wanted to see if you're open to. What's going on, guys? We are going to get into a seller call right now. This is a follow-up of a follow-up of a follow-up. I actually talked with this seller. He had a property in San Diego that didn't make sense after we ran numbers, and it just didn't make sense for us, but I think he's going to hold on to it, I think is what we came up with on that one. Now, here's a second property that he had told me about during that call that was his mother and father's. They ended up passing away and had to go through probate. He informed me that this month he would be going through probate court. The judge was going to assign him the right to sell. And so I reached out to him and had my underwriter take a look after a call. He sent me the appraisal. We ran numbers on it. It's really not going to work for his expectation of value. And I think we can either A, switch to a creative strategy where we can do some sort of sub-2 and seller finance, or I'm going to pass this off to, this is in Vegas. I actually have a guy that I'm working with on another REO sale, actually, and I'm going to pass him off to him as a listing referral. So either way, we can hopefully monetize this lead. But I'm going to let you guys be able to fly on the wall on this and hopefully, make something happen. So here we go. Name's Angelo. I'm going to call him right now. Let me get out of that. I don't know about you guys, but I always have 27,000 tabs open on my window at all times. So, hey, Angelo, what's going on, buddy? Brad here.
How you doing, man?
I'm doing well. How are you?
It's a busy day.
Busy's good.
That's what it is.
Remind me where you need to be numbers-wise. I know we talked about it, and I've just kind of been going crazy. Where did you need to be to make this work?
We're pushing around 3. I mean, there's a lot of things we have to consider, right?
Yeah, no, absolutely. I know you got a lot of options to kind of consider, just variables. I can tell you right off the bat that I will not be your cash buyer. That I can tell you, just to give you perspective based off of the square footage that we would need to rehab. Basically, the big 4 are the rehab amount, the cost of the cash, because I partner with other investors who are going to bring me the cash to close, and basically give you, I got to pay for that. The holding costs and the selling cost is going to be another big factor on the back end when I rehab it and I pay a realtor, and that's a big chunk, and those closing costs too. And then of course I got to put a little bit of money in my pocket, so those 5 things, and that's not even all the costs that go into it, but those are the big ones. And because of that, we're going to be way too far for me to not offend you with telling you a cash offer number. If you want to be at 3, I'm not even going to tell you where our cash offer is because it's just too low. That being said, you have kind of another idea, a couple ideas for you that I wanted to see if you're open to.
Okay.
So remind me, it's obviously going to be going to you and your wife, right? You two are going to be kind of making a decision on this?
Me and my siblings have siblings, and I'm with siblings, right?
Okay. Got it. How many siblings are we talking?
5. Well, yeah, 4. There's 5 with total.
Yeah, that's not unheard of. Wow, that's an awesome big family, man.
It is.
Get-togethers must be great.
Yeah, but me and my wife, we have 5 ourselves, and now we got 3 grandchildren.
That is awesome.
That's amazing. It is. So you said you had a couple of other options you wanted to float.
Yes, yeah. So I'm looking at the tax record. I see there is a loan on it, right? There is some type of mortgage on it in the amount 185 to 190. Sound right?
And I haven't looked at a mortgage balance, but I thought it closer to 195. But again, I was doing some math, right? Quick math in my head.
Perfect. Yeah, as long as we're in the ballpark, and if we get further down the line, we can get solid numbers. But so let's say you wanted, obviously you're trying to get to 300, and I'm not going to be close. So what actually works really well for these types of scenarios where I can't get to the number that a seller wants in a cash scenario, we can go to some type of creative financing method where I can get you more. So if I could get you, that 300 or maybe even a little more to make it worth your while, I'd be interested to see if you'd be open to that. And basically what that looks like is me taking over the mortgage payment. So I'll take over the mortgage. I'll give you, your 300 or whatever number we come up with. Obviously more than I can pay cash. So I'm paying a premium because I would be taking over the mortgage. So I don't have to come with new debt to pay off old debt. And really in that scenario, the banks are really the ones making the money. And anytime I can cut them out of a deal, I'd be more than happy to do that. So I take over the mortgage, right? And if it's at, let's just make it easy and make it round numbers and say it's at 200, right? So we've got the $200,000 mortgage. We've got $100,000 in equity. The other side of that creative method to make it worth it for us is we would be looking to do some type of seller financing on that $100,000. And so what that would look like, and this is all kind of, stuff that we can, work with you guys on and what makes sense for you. But essentially what it would look like is you guys become the bank in this situation. You finance me on this $100,000. I give you guys a down payment towards that $100,000 to secure the transaction. And then we structure monthly payments over time until, we'll say we amortize over 30 years. And then we have a balloon payment, so you're not waiting 30 years to get paid. Everybody's like, whoa, I have to wait 30 years? Like, no. We structure the payments out towards that. And then we have a balloon payment go off, like typically like a 10-year mark or, a 7-year mark, somewhere around there. All of those terms are workable / negotiable. We just got to make it work for everyone. My whole goal is to kind of pitch that to you and see, is that something you guys would think would work for you, or you guys would be open to hearing more about?
I certainly be. I never even considered that, quite honestly. So, why would I say no? We're not interested, right? Because they really don't know all the specifics. So, let me ask some follow-up questions here, okay?
Please do, yeah.
You forget about the lawyer and the whole probate for a second, okay? Basically, you're going to take over the house, right? You're going to be making the monthly payment, if you will, right?
Yep.
So we're not going to quote sell the house for real, but kind of, sort of, right? Privately, and then no bank, but as far as the mortgage company is concerned, it's the exact same loan as in the state of Washington, Rachel Rivera.
Absolutely, yeah. So no, and just to be clear, a sale does happen, right? You guys won't have to worry about the house at all. Once this agreement goes into place, you guys don't have to worry about it at all. We take care of everything, and whatever exit strategy works for us, we will employ. And that's for us to figure out, not for you guys. Once the sale happens, you don't have to worry about getting calls for maintenance requests if we have renters or, anything like that. I just want to make that clear. As far as up to this point, you are correct. Mortgage stays in place. We are paid.
And that's what I meant, maybe a hard sell, if you will, in terms of, that mortgage that we have today is the exact same mortgage that you would have. Mm-hmm. You just happen to be paying it, right?
Correct.
You just happen to be paying it. Versus a traditional sale, we would sell the house, our mortgage would get paid off, and then you create a new mortgage.
Correct.
In a traditional manner.
Exactly.
Okay.
And you can see why I wouldn't want to do that, and why it may not make sense for me from like a buy and hold scenario if I were going to hold it as a rental. Rates are at like 6.25 right now or something.
Right, of course. Right. And you go to and right on our rate for a period of time until you decide to refinance it or what have you, right?
Yeah, absolutely. Yeah, refinance, sell.
Yeah, whatever. Yeah,
100%.
Okay.
Tracking. Yep.
Yeah. So now let's talk about some of the legalities. When I say that, because that includes meaning I only know what I've been told. So I don't know all the scenarios, the nuances and stuff, right?
Mm-hmm. Yeah.
So I'm going to tell you my understanding, right?
Yes, please.
So when we spoke to the probate lawyer back in September when we started this whole process, right? Because after the 20th, 27th, whatever day that is, right? Now the 27th, you can go ahead and put the house on the market, fair market value. And so the court, because you're going through probate, and one of the things that the courts protect, if you will, right, is that the estate gets max dollars for their asset, right?
Right.
And so now I'm going to give you the number. He says, basically, you get an appraisal, the house is appraised for in dollars.
Mm-hmm.
So the attorney said that
yes,
you have to sell the house for 90% of the value because the court has to approve the sale. So again, I'm going to use a number, right? You know, that we've been talking about. We think the house might have paid at $375, so let's go with that, right?
Okay.
And so if it appraises at $375, if it appraises at $375, sale less than 90%, the court has to go ahead and, you know, scrutinize, and quite honestly, and here comes, other people have the right to go ahead and bid on that, because I'll use the number 3,000, that's what we're working at, right? We found somebody that's going to go ahead and, you know, pitch the stuff to us for $300,000, and the court says, gosh, you know, 90% of 37 is what,
375, you're saying?
Yeah, but I would have said 340, right? 330.
Sure.
Uh-huh. Yeah, you know, like, that's $30,000 below the threshold. We're going to go ahead and, you know, open this up and then see if other people want to go ahead and quote bid on it and says, well, I'll buy it for 301. Or I'll buy it for 305. And I don't know what those increments are, right? But something higher, right? You know, I don't think that they're going to say, we're not going to do this for 301 and 1 penny, right?
Right.
You know?
Right. Exactly. Yeah, I'm sure there's intervals.
Yeah, I'm sure there's some set intervals, right? You know?
Yeah.
So how did that come into play? Or do you know?
Yes, that's actually a great question. Some great insight. This is perfect for this situation, and I'll tell you why. I'm looking at the appraisal that was done back in 2021. Now, it may have gone up. Maybe that's why you're saying it's 375, but it came in at 355. You know, arguably it could have gone up a little bit. You know, we've been in a down market for the last 9 months, so it may be a wash. But, you know, let's just work with 375 for now. And they're saying, okay, 375, it's got to sell for 90% of 375, right? Which is 337.5. So basically what you're going to do is you're going to say, okay, great. I'm going to go to an agent. We'll put it on the market. We'll call it 340, right? So what's going to happen is, they're going to look at it and say, all right, it's selling for 340. Now, what actually happens is there's going to be closing costs and commissions on that. And on that 340, it's going to be about $25,000, $26,000, somewhere around there, right? So on that 340, you guys are actually pocketing, well, let's say net gross without, paying the mortgage off, $315. Okay, so now we're at $315. That's actually going into your pocket. All right, and then you're going to pay off the mortgage. We'll call it $195. Right, so you guys are walking away with about $119,500, $120. Right. So what I'm actually suggesting is that, okay, great, you guys actually walk away with that $315. I can come in and I can give you more for the property. So you guys are pocketing more money because you guys are doing it in a creative manner. So instead of putting it on the market at just because the sale price is higher, right, in a listing, there's no fees or commissions that are associated with my sale because we're doing it direct to seller. So what actually happens is in a creative structure, like a subject, this is called subject to because I'm purchasing it subject to the existing mortgage, and then we're seller financing the equity, I can actually give you more for the property.
I get the math part. My question is, how does that go with court saying, oh, well, that's below the 90%, yada, yada, yada. Is there risk that, other people are going to come in and quote unquote bid above that increment? And let's say these increments are $5,000 just for giggles, right?
Sure.
Somebody says, because we're going to say you're going to sell it for, 305, whatever it might be. Somebody says, oh, I want to make something 305, and now Brad Garcia is out because, of course, the other person saying, I'll take it for 305.
Well, and that's what I mean is like, okay, so if you're talking about, going out to bid and we're at 300 or 305 or 310, okay, great. Well, I'm talking about giving you guys substantially more, somewhere closer to what you guys would actually list for. But instead of having to pay the fees and the commissions, well, now you guys are just pocketing all that. Well, I'm talking about like, okay, you guys would pocket 315 in a 340 listing, or you could go out to bid and get 305, or we could do it creative and I can get you 330 for it. And you guys are walking away with more money regardless, no matter which option you're talking.
Right. And I'm not saying we're putting out to bid. I'm saying the court is putting out to bid, right? If the court, puts it out to bid, if you will, right? Now we're actually really selling the house 305. when we're doing this creative financing type thing situation, right? You would think you were going to try to sell the house that, if you put on the open market, we'd be selling that house at, at 375 minus closing costs, right?
Mm-hmm.
That's what I'm saying, so, would
would actually
be at
putting
danger? Would we be at danger of somebody coming in, swooping in, kicking you out, right? But instead of you paying, because your arrangement was you're paying all the closing costs, et cetera, right? All the fees there's $1 figure for sale, and now that becomes the new $1 figure for sale, and now we transfer the selling closing costs that you would have paid to you would have paid on our behalf and whatnot. Now we're no longer selling it to you. Now we're selling it to somebody at 305, and we're on the hook for all the closing costs and all the back end fees.
So is there a danger if we enter into an agreement of the court saying, no, you guys can't do that, and putting it out to bid and getting less?
Yes.
Okay, yeah, no, I don't see them getting in the way of a sale that is at fair market value. I can't see that ever happening. I can't answer 100% one way or the other. I think that would be a question that we should, and I think either way right now, we aren't going to come to an agreement because there's 4 other people that we need to bring in on this. But I would say this would be something where if we could get on like a 3-way call with your probate attorney, they would be able to clear that out.
Okay, great. That's a great idea. I certainly think this is worth exploring. Let me shoot him an email, see if he's got time for us, and then, and then see. And it's called Subject 2. That's what you said, right?
That's correct. Yep. Subject 2. Yep.
I'll pose the question. I might flood it, but certainly I'll get a reply. What I'm going to be asking for in reality is your time on on a call, and then you can go ahead and correct any misstatements.
Yeah, definitely loop me in on that email, and I wouldn't get too far into that. Yeah, definitely do that, and then I wouldn't get too far into depth into the email about what it looks like, just because, it sounds like you have a pretty good basis understanding of it. I have sometimes a hard time explaining it, even over the phone to people, and so it can sound weird over email or text or anything. So I would just say, you have somebody interested. We had some questions, in regarding a specific transaction, and we wanted to get on a 3-way call to discuss some of the implications that could be coming up because of that, and then just we'll get on a call and explain it more in depth.
All right. And so I'm going to ask you a favor.
Yeah.
Could you write that?
Sure. Absolutely. Yeah. No, I'll make it super, super concise and to the point, and I'll email that to you. And then lastly, I know I talked, so this is one option we have, right? First it was the cash. We know that's not going to work. Second is creative. Okay, we're figuring this out, right? We're kind of going down this path to explore, see if it makes sense for everybody. The last option that I have for you, because no matter what, anybody that I'm talking to, I want to make sure, regardless if I buy a property or not, I always want to make sure I'm providing the most value to you. The last option I have is that I actually work with agents in this area. And so if at the end of the day, this doesn't work for everybody, and, either the attorney says, yeah, this is, you guys are opening yourself up too much risk, or your siblings decide, they don't want to do it this way. They just want to do it a traditional listing, which does happen. Some people are just not comfortable with doing things in creative ways, and that's all okay. But I would say then if that happens, I can actually put you in contact with one of the realtors that I work with in the area. And they do a great job for me. They relist my renovated properties. So I can give you a good reference to an agent who does really good work, gets me top dollar for my properties. And that would be the last option, if this doesn't work.
Yeah. And for that, I can honestly, we declined. So, we've been, I've worked with a realtor, I talked about trying to move to Vegas, yada, 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 right? Mm-hmm. And basically, I have a relationship with the realtor and whatnot. And I promised him, said, hey, if and when the time comes, to put my folks' house on the market and whatnot, make sure you do a knock at their door. So.
Got it. Okay. No worries. And that's fair. I always say, even to people who have, who have worked with realtors in the past, or, have somebody that they work with, I always say, even if that's the case, always interview a second or third agent just to see what's out there, because you don't know what's out there until you look. Yeah, and so, I mean, at the very least, give them an interview, ask them the hard questions. If it comes to that, I'm not saying that they're going to come to that. They may be able to buy this and kind of wrap this deal up. Because I truly think that in a creative scenario, you'll be able to pocket more than you would as is on market listing.
Right.
So I think this may be the best option for you guys. So we'll just have to see.
Okay.
But yeah, I'll type up that email right now and send that over to you, and then we'll kind of just be in touch on the scheduling with all three of us.
Great. Yeah. And just ping me so I can go up there to my mail, pick it up and board it off. Okay.
You got it, buddy. Yeah, we'll do. I'll text you right when I send it over to you.
I appreciate it, Brad. Thanks for your time. Thank you.
Talk to you soon. All right, guys. So, in the comments, guys, just tell me if you would have done anything differently, what you would have said, if if there was any suggestions you have, or if you got some value out of this video and out of this call, definitely let us know. Give us a like, subscribe, notify, push the notification bell. If we're doing, good stuff on the channel, you guys want to see more of it, please let us know. Those just help out. It's a free way to help us out. This was a great call, guys. I have a good relationship with Angelo, got a lot of good rapport. He's a nice guy, which makes it easier. But I think we set ourselves up as authorities in the space. And, it's always better to kind of be upfront and honest about the fact that the cash offer is just, notice I didn't even tell him about it. It's too low. I didn't want to offend him and kind of ruin the relationship. I already had it in my mind that I wanted to pivot to subject to and seller financing. So the things that I could see arising that could be problems. The attorney, number one, not understanding what subject to is, or hearing about it and seeing that there may be more risk than he'd be open to letting his clients take. That's one option, or just kind of roadblock I see. The second roadblock is the fact that there's 5 siblings total, 4 plus Angelo. And so I may have a great relationship with Angelo, but I've never talked to these other 4 people. And so that in and of itself is a roadblock. Also convincing them that seller financing and taking payments over time, them not all getting paid out a lump sum at one time, that's going to definitely be a challenge. That's definitely going to be a challenge. So, if it makes sense, I'm going to have my underwriter take a look at the numbers on, because if we did subject to, and then we were able to give him more equity, let's say it was even $315 for it, and he's got, $200,000 in mortgage. So he's got $115,000. If paying a private money lender, 8 to 10% on that 115, plus whatever the mortgage payment is monthly, which I don't even know yet, is too much, then it may not be a deal. But this could be a rehab center, some type of halfway house type, option where we can rent it out per room. Could be an Airbnb, depending what area it's in. I know this area in particular is really nice for investors in this area. So just based off of talking to the agents I know in the area. So there's a lot of options we have, but we need to get over these roadblocks and just kind of see what works. But I hope this was helpful to you guys, just kind of learning how to address the, pivoting to creative finance and what to say and what not to say. If you guys have any questions, please schedule time on my calendar. I put the link below, or just put it in the comments below. We'll get to you as soon as we can. But, thanks for watching, and we will see you on the next video. See you guys.